Reserve Bank Governor Michelle Bullock says a lot needs to go our way to bring inflation back under control without having to hike interest rates. Speaking after that decision to hold rates at 4.35% yesterday, she revealed the RBA did consider raising rates. That's in response to April's inflation figures being higher than expected.
Yes, the board did discuss the case for increasing interest rates at this meeting. In the end, it decided that its current strategy of staying the course and trying to bring inflation back down by bringing supply back to demand was the right way to go.
Ms Bullock says the board is prepared to do what is necessary to get inflation back to its 2.5% target by mid-2026. Treasurer Jim Chalmers insists the federal budget will not make it harder for the RBA to bring inflation back under control, though.
Budgets are an important way for us to respond to pressures in the economy, but budgets aren't the only determinant of inflation, obviously, or future movements in interest rates as well. And I think that the Governor has made that really clear.
All right, let's bring in the KPMG Chief Economist, Rynne, now for his thoughts on all of this. Brendan, so let's just start off with whether or not you think what the federal government and what the state governments are doing, primarily Queensland, in terms of feeding inflation. Do you think all of those handouts are inflationary, making it difficult for the RBA to do its job?
Oh, it absolutely is. And I think that we've spoken about this quite extensively over the last few months, where it became incredibly obvious that there was a disconnect between fiscal policy settings in Australia and monetary policy settings. And what you've seen not only at the Commonwealth level, but now also feeding through in terms of state budgets, is quite a large levels of expenditure, which is actually making the role of the RBA and the job of the RBA bringing inflation down just that much more challenging when it really doesn't need to be.
And then you've got tax cuts from July 1. Will they be inflationary as well?
Look, they are. They're marginally inflationary, but they're always built into the system. We knew that they were coming. What was not planned or not anticipated was just the level of spending undertaken by governments on a whole range of other activities. The other thing that's also muddying the water with regards to the Reserve Bank and understanding what's happening with inflation are all these cost of living relief programs that are being put in place that technically are going to see inflation fall because how they're designed. But we've already heard the Reserve Bank say they're going to look through that and try to understand really what's happening with underlying inflation.
Okay, so where's KPMG at the moment, Brendan, when it comes to either cash rate rises or cuts this year? Where are you at?
So we're still of the view that we don't think the Reserve Bank needs to increase the cash rate. We think that maintaining its current levels, which are quite contractionary, will continue to bring inflation down. I think one of the things to understand is that you're seeing inflation, monthly inflation figures bounce around, but the pattern of inflation that we're seeing is still following a similar pattern to what you saw in the US. So we're about 7 to 8 months behind the US. You saw inflation reach a low in about August of last year, kick back up a little, stay steady, and then start to fall again. Now, our expectation is that we'll probably see a similar pattern here, and all that means is that the Reserve Bank needs to sit on its hands, let the current cash rate do its thing, and continue to bring inflation back down, and then we'll start to see the real cash rate, which is the difference between the nominal and inflation, reach a level that will allow the Reserve Bank to bring cash rates back down, probably in the first quarter of next year.
First quarter of next year. Okay. A lot of mortgage holders holding out for that, Brendan. Appreciate it. Thank you. We'll talk to you soon.